Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, markets are in a tailspin. It's a bloodbath on D Street as investors have lost over 6 lakh crore rupees in the Monday morning mayhem. So what should you be really doing at this point in time? Is there a way to protect your portfolio in the current market crash? Joining in to discuss all these ways to stay afloat amid this sharp correction in the markets, I have with me a very special guest joining in. Mr. Vivek Mashrani joins in. He's the founder of TechnoFunda Investing and a recent author of his first book, You Can Compound. Welcome, Mr. Mashrani, and thank you so much for taking the time out for Business Today TV. Congratulations on your first book too.
Thank you so much, Sakshi, for having me here again. And it's always a pleasure to talk on your channel. Yeah, it's amazing.
Thank you so much, Mr. Mashrani. So your book is all about, the strategies and the secrets of investing in the stock markets and how to make money. So that's what exactly all the investors and viewers must be wondering right now in this current market mayhem. Help us know what is the secret to keep our portfolios in green when the markets are still seeing bloodbath all across.
Yeah, so very true. Every one of us are in the search of that entire buy, add, sell strategy. And that was the focus because there are very few books in the Indian context where we get to learn first when to buy and how to buy, and then when to add and ride your winners, and finally when to sell. And rarely people talk about risk management and exit strategies and everything. We remember all these strategies right now in these kind of market conditions, right?
Yeah.
So the thought process was something which I was lacking in my investing journey. Why not to, put my learnings into practice and implement that in the book itself, right? So that is where, I've put in the strategy of core and satellite portfolio, which covers how you can go into cash hedge on the satellite portfolio and how you can still remain invested in the core portfolio companies. So that is all the book is about.
Right now, Mr. Mashrani, now all the viewers are really wondering at this point in time. You also tweeted about this as well, that in the current momentum as to what is the strategy that one should adopt. You said that, tweet that a Warren Buffett quote, I think you mentioned where one should be fearful when others are greedy and one should be greedy when others are fearful. So in this current environment, what is the right thing to do in the current fall? Be fearful or be greedy?
Right. So what I track is something called as India VIX index, which is volatility index. And the level which I track there is 20, right? So if the level goes below 20, that means it's like good momentum and people are relaxed and there is no fear in the market. As soon as it starts going up about 20, that's where, you gauge that there is high volatility and a lot of fear because people are hedging both sides on extreme, on the call side and put side. So right now, I think today, if we see it has just spiked up from around 19.5 level to 21. And if this keeps on going further, like around 25, 30 is a good level where you actually know that people are fearful. Right now, I think people are cautious. They are still not selling, but they are not even buying. Yeah, very, very cautious that what's happening. It's a surprise moment for a lot of investors, but I think the real fear is yet to start. That's what I'm getting the feel from the data points.
Right. You're right over there, Mr. Mashrani, because we are in the 6th month of the year. We've already seen a roller coaster ride for investors in the first 5 months. So what is your take on the markets in the short to medium term? Are you looking at the current fall as nearing the bottom or beginning of a bear phase?
So it's very difficult to predict the market where it will headed. But if you see the data points again, we are just in the beginning of, quantitative contraction, when they are, sucking out the liquidity from the system. Last 2 years since COVID, March 2020, all the central banks have been pumping money. Right. And that's now reversing. Plus the interest rates are also going up. That also sucks, liquidity to an extent. So that's the reason, I think globally, because of the liquidity flows which are going away, I think we are seeing a lot of sell-off. And if we have seen the track record of Indian markets also, last couple of weeks, a lot of FI has been selling in the market.
Yeah.
The only savior is that, mutual fund SIPs are continuing. The Indian investors have been bullish. And if you see the AUM data of SIPs, that has actually gone up versus the same period last year, right? So that's where I think the liquidity is protecting the Indian market. Otherwise, we would have been even further down. But I think it's not any time to do any adventures. I think stay in the core portfolio. Only when you see the reversal, I think that's where I like to get aggressive on the satellite side of portfolio. So as I said, I think in our previous interview also, I do like 70% core and 30% satellite. So satellite is where you take advantage of momentum, and if the market is like this, you go into cash, and 70% you hold it as a long term any which ways, because it doesn't make sense, right, to sell your long term core portfolio stocks even if market is falling.
Right. So where should one really invest in this fall? Are there any sectors that you think investors should enter into? They have entered into a buy zone in the recent fall?
So what I do in this kind of scenario is I see the relative strength, like which all are the companies which are outperforming Nifty in this kind of falling market, right? So it could be any sector. And say, for example, I'm just giving example, no recommendation again, like Page Industries, right? It has fallen just 10% from its high. Like it was around 46, 47,000. It's right now 41,000 kind of level, 41, 42,000 levels. So that's where you know that these companies are showing strength and they are outperforming market. When market starts running up, these will be the first one to start going in the positive direction. Most likely, again, it's a probabilistic thinking. But if they are showing strength, that means there are willing buyers for these companies. So rather than betting on a momentum stock right now, or any companies where there is no track record, you basically filter out compounding companies which are consistently delivering in terms of business performance, and then we can add a layer of relative strength versus Nifty. That is what I personally do in my journey.
Right. Now, all the investors might be wondering what's on your shopping list. Where do you see value in this market? Should they go for the evergreen blue chip favorites, HDFCs of the world, the Reliance Industries, Bajaj Twins, or should one really go for some of the mid and the small cap stocks that have really fallen sharply in this current fall?
See, mid and small cap will require a different kind of risk appetite, because if the liquidity conditions are like this, you never know, it can even fall further. And the falls in small cap and mid cap for a lot of new investors would be slightly surprising, but it is very normal to fall by 30 to 50% in mid cap and small cap without big reasons, right? That is what we have seen across last decade also. So I think if somebody is really conservative, one should definitely look for good compounding companies. And I don't generally try to get companies which are low growth companies in this environment, because if one does their research correctly in this era, in mid cap and small cap, if they get right stocks, they can even do 5x in 3 years. And even in decent compounders, they can do easily 2x in 3 years, right? So the focus should be to find at least companies which are growing 15 to 25%, and which can continue that for next 3 to 5 years at least. So that is where you can double your money in 3 years if that compounding engine happens, because right now the valuations are getting in the saner zone.
Absolutely. So the valuations are sane enough. But look at the kind of investors, kind of chaos at this point in time. They entered into some stocks like LIC, for example. That has been a complete wealth destroyer for all the investors who got the investment in the allotment in the IPO as well. The stock has in fact slipped below the 700 mark after the anchor book ended. There's further fall and a record low time after again, but nobody is able to find out what is the bottom for this stock. What do you advise investors of such stocks who invested in a marquee company, market share, everything goes well for the company, but then you don't see that reaction in the markets?
Right. So basically, see, this is like again a repetitive phenomena where new investors learn old lessons, right? Every bull market we have seen, like 2008, there was Adani Power, Reliance Power. Then we had around 2014 euphoria. We had a lot of IPOs coming in, and then same again. We had Paytm and LIC, and a lot of euphoric. We have Pesa Bazaar also. A lot of these IPOs came at euphoric levels in the market. The valuations looked stretched at that point of time. And the best thing to do this kind of approach is stay away, because IPO in my definition always means that it's probably overpriced, because they come at overrated market conditions, and then everyone is euphoric, everyone thinks I'll make a quick gain, and then market starts falling, and then they hold it forever. I know a lot of friends who are still holding Reliance Power shares, even though it is almost like zero now, right? So they like forcefully become long-term investors. So I think the best strategy, when you realize that you have made a mistake, the best strategy is to get out now. Okay, that's what I follow in my journey, that if we realize that it's a mistake, the growth which we anticipated or valuation which we are paid is slightly higher, then it's time to get out. And for LIC particularly, again, not a recommendation, it's just my view that every year they are basically losing market share, right? So the private players are gaining market share from LIC every single year. And I think that's the mega trend which is going to continue, because the premium prices, if you compare private players versus LIC, there is a huge difference between premium pricing because of inefficiency and a lot of cost overruns and the way they invest their money. Right, so that trend will continue. And other mega trend that is happening is the digital mega trend, which we are all part of, and right now we are able to talk with this platform. Is earlier, their competitive advantage was ground level LIC agents who used to, go and sell the policy physically. Now that advantage is, cracking because of the online channels. Now you have Paisa Bazaar kind of, players who are able to sell it through calls and different digital technologies. And even, other players have been adapting the digital, systems, ecosystem. So that's, two major factors which are working against LIC as such.
Correct. Understood. So if you were to discuss or to share, 3 strategies for first-time investors at this point in time, those investors who had entered when the markets were like, whichever stock you put in, that stock was like really rallying. So you never had to really think too much about fundamentals or like, technical patterns. You invested and the market was up in an uptrend and you got the money. Those investors who are now feeling stuck, what would you really advise? 3 strategies for them in this current market correction.
Perfect. So the first strategy is relook at your asset allocation, right? It goes without saying that if you have allocated too much into equity, again, it's the right time to reassess whether your overall allocation in terms of fixed income, real estate, gold, and equity is in proportion to your risk profile. So if somebody has like over allocated to equity just by getting carried away from the bull market, they should reassess and trim down that portion if it is required. That is the first thing anyone should do. Second thing, review the portfolio companies and see why in the first place they had bought it, whether it was just somebody gave a tip or somebody told on TV or somebody just wrote it in the newspaper or some friend was telling. If they don't understand the business and if they don't know what is the growth that is happening in the business, they should either try to research it or first sell and then try to see which are the better companies they can get in their portfolio, right? And third thing is don't keep on buying the dips. Have a plan in place, and if you have really good companies in the portfolio, I think it's not a time to just panic and sell. So if you are really having good portfolio companies which are compounding, earnings growth are there, and if you're really done your research, then it's just time to listen to music and read my book probably and just chill.
Absolutely. So listen to music and read your book. That's the tip that you're giving at this point in time, and not to panic sell. That's the biggest thing if you have some good quality names in your portfolio. Thank you very much, Mr. Mashrani, for being with us and speaking to us, and all our viewers, also helping them understand what's the best way to approach the markets in this current market mayhem. Thanks a lot for being with us.
Thank you so much.
If you like the video, do like, comment, share and subscribe.